Good afternoon, everyone, and welcome to another presentation of CORA Capital's webinar series. My name is Dominic Vercella. I head CORA Capital's insurance division. I've been providing assistance securing life insurance, disability, long-term care, and employee benefits for our clients for over 30 years and have been with CORA since the inception. Today's topic, as you know, is understanding the true cost of long-term care insurance and long-term care in general. Today we have a presenter by the name of Tim Kelly. Tim is the founder and president of Breakthrough Insurance Group. He's a long-standing friend and colleague of mine. Previously the senior vice president of sales for commercial brokerage. Throughout his long and distinguished career, Tim has educated thousands of agents and consumers on the topic of insurance planning and has very specific knowledge and expertise in long-term care planning. So without further delay, I give you Tim Kelly, and he will start the presentation. By the way, during the presentation, feel free to type in any questions which will be answered at the end by the both of us.
Thank you, Dominic. I appreciate you having me on the webinar today. So welcome, everybody. And as Dominic mentioned, we have a very important topic for you today, and that is the subject of long-term care planning. And I'll tell you before I start my presentation this afternoon that this is a topic that's very near and dear to my heart because I actually went through it personally with my mother, who had a long-term care event that lasted upwards of 6 years. She lived at home with my sister and my sister's husband for 2 years, needing assistance, and then moved into an assisted living facility for 2 years, and then lived the final 2 years of her life in a skilled nursing facility. So as a family, we experienced pretty much the full continuum of care where someone could need long-term care services and experienced all of the difficulties and stresses associated with those, whether that be emotional, physical, financial, and I'll be talking about all of those different elements in our presentation tonight. So again, welcome everybody. I hope you'll be getting a lot of great information tonight, and at the end, as Dominic mentioned, we'll be able to answer some questions for you, but just feel free to type those questions in as I go through the presentation, and we'll answer those at the end. So let me share my screen here, and we will start the presentation. So again, welcome everybody, and thank you for being here today. The actual title of the presentation is Protecting Your Most Important Asset, and that would be your family. And as we go through this today, we're going to talk a lot about the family and how it's impacted if there is a long-term care event. And so our agenda is the consequences of not having a plan for extended care. And you'll see me use the words extended care a lot tonight, but by that you'll notice that what I'm really discussing is long-term care and what impact that will have not on you, but those you love, developing a plan to mitigate those consequences. What will you pay for that plan? And also my goals tonight are to give you insight into the consequences needing care over a period of years will have on those you love. Speaking to the consequences an extended care event will have on your best thought out retirement plan. And we'll discuss some options for protecting both you and your family and finances should you need care. So as you notice, I'm referring to your family a lot during the presentation already, and I'll continue to do that throughout tonight, because as you'll find, as we kind of get through how a long-term care event actually impacts everyone around you, that is what will become your major concern. So living a long life could be in your future. Planning for it is now a necessity. I believe that reasonable people understand that they could live a long life. I'm not going to sit here tonight and give you a bunch of statistics about what the probability is that you'll need long-term care in your retirement years, because honestly, statistics, while they're informative, that doesn't mean it's going to happen to you, but we're just going to discuss the possibility that it could. Understand it's possible that you could become frail and need care as you age, and are willing to consider taking action if you understand that needing care could have serious consequences to your family and retirement portfolio. So that's all we're talking about, is you could live a long life. And the fact is that the longer you live, the more likely you are to need some help. And what sort of help you may need, we'll talk about that, so you could plan for that. But we're all living longer lives. The doctors have figured out ways to keep us alive longer. They have surgeries now that, quadruple bypass, as an example, where that could be something that 50 years ago would have ended our lives. Now we could have something like that and live another 30 years. So the doctors, the pharmaceutical companies, they figured out new technologies that allow us to live longer and longer. But again, the fact is, the longer we live, the more likely we are to need some assistance. So we have to plan for that. That said, I have clients who tell me all the time, that's true, but what if I don't live a long life? Very few people in my family made it past the 70s. I've had clients who will say to me, hey, my father passed away when he was 62 of a heart attack. I'm not going to live a long life. Or even if I do live a long life, what if I don't need long-term care? Everyone in my family was healthy until the day they passed away. So these are things that I've heard many times before, and you very well may be right. The risk of dying at an early age may be high, or the risk of needing care may be low because of your family history. But we don't know what the future holds. So have you considered the consequences to those you love if you ever did live a long life and needed care? That's all we want you to consider tonight. All right. We're not trying to convince you that it's going to happen. We're just saying we have to consider the possibility. Sometimes it's easier to understand this concept if we apply it to something that we're more familiar with, like the subject of life insurance. So as an example, you may think of life insurance when you're younger, maybe you're 30 years old and you have a couple of children and a new job and a new mortgage, and you're 30 years old. And of course, at that age, you don't expect to pass away. However, while the probability of that happening is very low, you still purchase life insurance because what you're considering is, if it ever did happen to me, the consequences to my family could be catastrophic if I don't have life insurance in place. That's how we want you to think about the long-term care risk. in this case, if you were to live a long life and need care, while the probability may not be very high in your mind, what we would like you to consider is, if it does happen, what are the consequences to your family? Not that it will happen, but here's what causes the need for extended care, just so you understand this a little better. Could be a physical impairment. All right, so this is where your body starts to break down in some fashion. We call these the activities of daily living. Things like bathing, dressing, toileting, transferring, which is moving from place to place, say from a chair into a wheelchair or a bed into a wheelchair. So those types of things that we do every day that we take for granted. If you have a physical impairment, which starts to break your body down physically and where you start to need some assistance, that's one way that you may need long-term care. Or it could be a cognitive impairment, which is a measurable decline in your intellect. So think of things like dementia or Alzheimer's disease. We've probably all known someone who may have been afflicted with that condition now. So as we age, the probabilities go up dramatically for us to have a condition like that. So when that happens, we may need assistance. So it could be physical or a cognitive impairment, which causes us to need care. Both conditions require something called custodial care, not medical care. So if you have a physical impairment where, let's say, you're having difficulty bathing and dressing yourself every day, you don't need a doctor or a nurse to help you with that. You might need someone like a home health aide, or you might need a family member to help with that. Also, with a cognitive impairment, on a daily basis, you may need someone to be around to make sure that you're safe. All right, to make sure that you don't wander off, or, you hear stories about people who turn on the oven and forget to turn it off. You need someone around to make sure that your environment is safe and you are safe. You don't need a doctor or a nurse for that type of care. That's called custodial care, which is often provided by a home health aide or maybe even a family member. And here are the two sets of consequences to your family if this happens. The first is to the emotional and physical well-being of those you love because of the nature of extended care or long-term care. Now, let me explain this to you. By definition, extended care is a safety issue, right? We just talked about the cognitive impairments and where you have to be safe in your environment. Also, if you have a physical impairment where you're not able to, say, bathe or dress yourself, it's a safety issue, which means that providing care or supervising movement quickly becomes all-consuming. Someone needs to be around all the time. And if that's a family member, that has a direct impact on them emotionally and physically. All right. So what I have seen time and time again in families is that a family member starts to take on this care, which we often call a burden, right? This care burden for a family member. And it literally will make them either emotionally or physically sick because the job is so overwhelming, having to do it 24 hours a day. It's a huge responsibility. And it is overwhelming not just to have to do that job, but also think about it for a second. You're taking care of a loved one who's very ill at that point in time, and it's very difficult to watch that every day. So this is an overwhelming job for a family member. So let's take an example of a married couple who is getting older, and let's say it's the husband who starts to need care. His wife steps in and starts to care for him on a daily basis. Now, they've been married for a long time, right? Maybe 50 years at this point. They're in their 80s, and she's determined to take care of him herself. And after a while, we see this usually within 6 months of time. The wife will raise the white flag and say, I can't do it anymore. It's literally making me sick as well, and I can't do it any longer. Now, what happens is this forces a child to step in, causing him or her to reorientate their life, because now the child has to go and take care of both mom and dad, who are now both needing care and in bad shape. And that forces that child to step in and take on that care burden. Now, this is what most families want to avoid, right? We hear over and over again as we talk to parents, I don't want this burden to be on my children, right? And that's what we're trying to avoid by having a plan in place before this happens. So, providing care to chronically ill people makes healthy caregivers chronically ill. In the example I just gave of the wife taking care of her husband, again, usually within 6 months period of time, we will see that person who is the full-time caregiver actually not be able to do it any longer. And that usually forces a child to put aside their life because, frankly, what choice will they have? Will they have? Mom and dad now need help. Who else is there to do it? Someone has to do it. And if any of you have had a long-term care event in their family, who does that normally turn out to be? A son or a daughter? So you know, and in all of the years that I've been in the long-term care business and helping people to plan for this, which is now close to 25 years, 99% of the time, it is the daughter, right? For whatever reason, it is the daughter that steps in to take care of the parents. Generally, if there's a son or multiple sons, they may live further distance away. They're working full time. They don't have the ability to do it, or they just simply won't do it. Whatever the case may be, the large majority of the time, it's a daughter who steps in to do it. And unfortunately, providing care does not bring the children together. It tears them apart. Again, if you've had this in your family, you've seen this, where the daughter steps in to become the primary caregiver, and it starts to create resentments amongst the siblings. You start to fight about who's going to help, who's going to do what. Also, when the finances get involved, what are we going to spend money on? Mom and dad's money to take care of them. How are we going to do that? All of this is very emotionally charged. And I will tell you, I have seen families who go through this where the kids never speak again to each other, even after mom and dad have been gone for 10 plus years. It's a horrible thing to go through, and we see it over and over again in families who have not planned for this. So put simply, if you ever need care over a period of years, your life is not going to end. Someone else's is. So just a quick thought. Did you notice that I didn't mention anything about nursing homes? And that's because the real damage to the family begins not when a placement into a nursing home or an assisted living facility is made, but when the decision is made to keep the person they love at home. So listen, here's the reality of it. Almost everybody wants to be at home. Everybody wants to stay at home. So when they need care, they would like to stay at home as long as they possibly can. But when that decision is made and there's no plan in place ahead of time, all of that falls onto the children to take care of mom and dad. And that's when the family goes through all of these things that I've just revealed in the previous slides. Does anybody know why families struggle often against the odds to keep someone at home? Because making a placement into a facility breaks your heart. This is extremely difficult. Me and my siblings went through this with my mother, where my mother was living with my sister, as I mentioned earlier, and my sister just couldn't do it anymore. And also the house was just not a safe place for my mother. It was a 2-story home with the bedrooms upstairs, and my mother could no longer get up and down the steps. She actually had a fall down the steps at one point. And it was just very emotionally and physically demanding for my sister and my sister's husband. It was starting to impact their marriage. You see all of these things that happen. And then you have to make a placement into the assisted living facility in my mother's case. And that was just a heartbreaking thing to have to do, because we knew that my mother did not want to go there. She wanted to stay with my sister, but it just wasn't possible or safe anymore. And so that is just an excruciating thing to have to do to a parent. So we naturally try to keep them at home as long as possible. And you get yourself into this cycle of it being really, really difficult to keep them at home, but you do it as long as you possibly can. And this is where we see all the problems arise with the spouse and their health, and then the children and the children fighting with each other. Just a very difficult situation when there's no plan in place. The second set of consequences is regarding the finances. Paying for care requires a reallocation of income. So this has an immediate impact on your ability to keep your financial promises. If the illness lasts long enough, it leads to an invasion of your portfolio. And this could have a direct impact on the ability to secure your surviving spouse and children who may be depending on an inheritance. So think about it this way. You have a certain amount of income that you live off of every month to pay your bills, have your hobbies, travel, do all the things that you want to do in retirement. And then all of a sudden you need care, and that income has to go to pay for care now. And so in order to continue your lifestyle, the lifestyle of your spouse, your kids, grandkids at that point, maybe, you need to start pulling money out of your retirement portfolio that you did not intend to do. So I want to pause for a moment and ask you, have I told any of you that you're going to need care? I have not. Have I quoted any statistics telling you extended care is in your future? I have not. In fact, I've told you that it may not. But I'm hoping that you begin to see the impact it could have on the people around you if there's no plan in place and if this does actually happen. I only want you to consider the possibility. So, what do we do about it? How a plan can protect those you love. The plan has 2 objectives. The first is to allow you to remain in the community, so stay at home if you want to, without risking the emotional and physical well-being of those who will provide your care. And 2, to preserve your retirement plan so it can execute for the purpose you intended. And these are the things that Dominic and maybe Sal are helping you with your financial plan, got it all set out, figuring out how much money you need in retirement, how much income you're going to take, doing all the things that you love to do every month, supporting those financial obligations, considering taxes and all of that, and making sure that there's enough there for the surviving spouse when the first of you passes away. Considering all of those things, the plan makes sure all of that executes the way you intended. So let's look at long-term care insurance as an essential tool which protects your family and your retirement portfolio. How many believe the product protects them if they need care? It actually doesn't. It protects your family. We've talked all about that today. Provides a stream of income that is used to pay others to provide the care. This allows your spouse to supervise the care rather than provide it him or herself. So your spouse doesn't have to become your primary caregiver. They can remain with your relationship intact as your spouse, not having to become that caregiver and have your relationship change dramatically. And it's a second gift of life to your children. It keeps the kids together by keeping them apart. And by that, I mean, when your children become responsible for your care, they will have to be together all the time and talk about it all the time in a very emotionally charged way. Remember, who's going to do this? Who's going to do that? How do we spend the money? Those things begin to really build up resentments, and it will tear those kids apart. We want to keep the kids together by literally keeping them apart in this way. So how many of you believe the product protects your assets from being spent on care? Doesn't do that either. It provides a stream of income to pay for care, so that your primary source of income, generated maybe by Social Security, your pension, and your retirement portfolio, does not have to be reallocated to pay for care. Your ability to support your lifestyle, which includes commitments to your family and community, is assured, which means you never have to go into your portfolio to then pay for your lifestyle, because all of your income is now paying for care. All right, so again, long-term care in a way doesn't protect your assets. It actually provides a stream of income that pays for your care, which ultimately will preserve your retirement portfolio for the reason it was intended. Some final thoughts. Successful people who love someone purchase life insurance not because they think they're going to die during working years. They buy it because of the consequences to those they love if they did. Successful people who love someone purchase long-term care insurance not because they expect to need care. They buy it because of the consequences to those they love if care was ever needed. Now, a little bit on the insurance itself. In the beginning, I mentioned this isn't a lot about long-term care insurance. It's more about what happens when there's a long-term care need in the family. I wanted to first make sure you understood that before we talked about the product. So I have a little bit of information about the products. I'm sure you have questions about that. So there's really 3 different types of products, and Dominic can really talk to you about these and share the differences with you to make a recommendation as to what might be best for you and your family. There's traditional long-term care insurance, which is pure long-term care insurance. It's there to provide long-term care benefits, that stream of income that we talked about to pay for care. And then there's hybrid life long-term care insurance, which is actually built on a life insurance chassis. So what that does, in addition to provide long-term care insurance, is it also provides a death benefit if you never need the long-term care. So some people think with traditional long-term care insurance, hey, if I never need the long-term care, then I've just kind of spent those premium dollars and never got anything back. Well, with the hybrid life LTC, if you never need long-term care, your beneficiaries will get a death benefit. So at least you always get your money back, whether you need long-term care or not. And then there's also hybrid annuities with long-term care insurance. So it is built on an annuity chassis, and that basically is used if, in fact, you may have money in an annuity currently, and that's what you would like to use to fund your long-term care plan. You can move the money from the old annuity into this annuity hybrid product and have a long-term care product at the same time. So there's multiple different types of products available in the marketplace today, and depending upon your specific circumstances, that will determine which one is best for you. But there's multiple options. Many people know about traditional LTC insurance, but not as many know about the two different types of hybrid or combination products that can combine either life insurance or annuities with long-term care coverage. So some really great options for you to discuss with Dominic. And finally, the way that these products work, I wanted to give you a little bit about how they work and how they're structured, some decisions you'll have to make that Dominic can help you with. But first, there's a monthly benefit. So basically that means how much is the insurance company going to pay every month in that income stream? How much are they going to give you on a monthly basis to pay for long-term care services? So in the marketplace, in general, you can purchase anywhere from probably $1,000 a month to $10,000 a month. And anywhere in between. Most people buy somewhere in the $4,000 to $6,000 monthly range. And that's because when you look at the cost of home care and the cost of assisted living facilities where you're most likely to receive care, that will cover the large majority of the cost of that care at home or in assisted living. Again, somewhere between $4,000 to $6,000 is what most people are purchasing. And then we have a benefit period. That means how long is the insurance company going to pay you that monthly benefit? You can buy anywhere from 2 years of benefits up to a lifetime of benefits. In other words, it never runs out. So once you need care, you can receive that benefit for anywhere from 2 years up to forever. Most people buy somewhere between 3 to 5 years. So 3, 4, or 5 years. And generally that makes sense because the bulk of long-term care claims, how long people actually need the services, generally will last somewhere between 3 to 5 years on average. So most people are purchasing somewhere between 3 to 5 years. Finally, or next is the elimination period, and that's like a deductible. That's a number of days, 30, 60, or 90 days usually, where once you need care, you will pay for your care out of your own pocket. So think of it like a deductible on your car insurance, where you may have a $500 deductible. And what does that do? That means that you pay the first $500 out of pocket, But what that does for you is it lowers the price of the coverage for you, right? So if you had a higher deductible, say $1,000 on your car insurance, your premium would be less. It works the same way with long-term care insurance. The higher your elimination period, or the longer period of time you pay out of pocket for your own care, again, 30, 60, or 90 days, the higher that is, the lower your premium's going to be. Most people select a 90-day elimination period. That has a pretty good discount on your premium when you pick 90 days as opposed to 30 or 60. So most people are picking a 90-day elimination period and just pay for care out of their own pocket for the first 90 days when they go on claim. Finally, inflation coverage. Inflation coverage just grows that monthly benefit every year by a certain percentage in order to keep up with the actual cost of care. So let's say you're 60 years old today and you may purchase this coverage, but let's say you don't need it until you're 80. That's 20 years from now, and certainly 20 years from now, the cost of long-term care services like home care or living in an assisted living facility is definitely going to be a lot more expensive than it is today. So you want your benefits to keep up with that actual cost of care, and the inflation coverage does that for you. Most people pick 3% inflation coverage, so that monthly benefit will grow by 3% every year in order to keep up with that actual cost. So I hope that was helpful for everyone. That is the end of the presentation. So I think at this point in time, Dominic, we can definitely open it up to some questions if we have any, and I'd be more than happy to answer those.
Thank you, Tim. Really helpful information. And I hope everyone out there understands the gravity of the need for some planning in this case, because there are tremendous consequences to not planning. So that was the point we were trying to get across. I think Tim did a fantastic job of that. One of the questions that came up, Tim, is I was asked, when should I start considering planning for long-term care, or in fact purchasing a long-term care policy? So I tend to tell clients the fact of the matter is, the sooner the better in most cases. Most of us do not consider this before the age of 50. But what you have to realize about the nature of the products involved is that as you get older, it gets more expensive. It also leads to more health issues as you get older, which in turn cause premiums to go up, or even worse, where you may not even be able to purchase long-term care insurance. So the sooner the better. I would say age 50 and above, start to consider this. And, ideally, people that need long-term care are most of us. And when I say that, if you are not of means and there's really not a whole lot to protect, the long-term care planning is difficult and is taken care of by Medicaid and state. If you are extremely wealthy, then the cost of long-term care may not be a big dent on your portfolio. However, for the most of us who have accumulated some wealth and want to protect our family and our surviving spouse, and maybe leave something behind for our children, that's the market for long-term care, because it does replace that income that you would need to take out of your portfolio.
Yes, absolutely, Dominic. I agree 100% with that. I agree, the earlier the better for sure, because of all the reasons that you mentioned. I will add to that, a lot of people start to consider this when two things occur in my mind. One is when they start thinking about retirement. Okay, so the kids are through college and they're starting to look at, hey, when can I retire, and how much money do I need to retire, and how much income can I take out in retirement? When they start thinking about that and start thinking about those issues, it's also a great time to think about, all right, now what am I going to do to plan for that? And then secondly, people who are generally thinking about that also have parents who are now reaching around the age of 80. And that's when they start to see their parents' health fail, and maybe the parent is having a long-term care event, and they see what that does to their family, and they say to themselves, I definitely want to plan for this, because the way this played out with my parents is not the way I want it to play out for me and my children. And so we start to see people really ask about this and think about this when those two things occur.
We have another question. It is there a plan whereby one pays a premium, but it allows the spouse to use the plan if the other doesn't need it? Possibly hybrid life. So Tim, I know we have products that work in a pool of money scenario. In other words, you purchase a pool of assets which can be used either by you or your spouse until that pool of assets is used up. And so the answer to that question is absolutely. It is not common though, however, with traditional life insurance, traditional long-term care insurance. However, with the hybrid plans, you do see the pool of money being utilized, and both spouses can use that.
Yeah, so that is actually a possibility with all three product types that I mentioned: the traditional, the hybrid life, and the hybrid annuity. With the traditional long-term care insurance, there's a rider coverage called the shared care benefit, which allows the husband and wife to actually share the benefits of each other. So if one doesn't use it and passes away, the surviving spouse gets all of the benefits that were not used by the spouse that passed away. So that would be called the shared care benefit in traditional long-term care. And then both for the hybrid life and annuity products, you can do joint contracts there where a husband and wife shares one policy. So it's actually available in all three different product types, depending upon which type is most appropriate for you.
Okay. Well, seeing no other questions, I hope you enjoyed our presentation today. I hope you got something out of it. Enjoyed may not be the correct word to use when talking about long-term care. However, I do hope you got some information that can help. Again, I am here. I've been with CORA since inception, here to answer your questions, and if need be, provide a customized quote for you on the type of long-term care that makes sense for you. And I can do that at any time. So I wish you all a good night. Tim, thank you very much for your presentation. It was fantastic. And we will see you all at the next CORA College.
Thank you, Dominic. Appreciate it.
All right. Good night, everyone.